evening. My name is Dennis Jimenez. My partners are Shih-Heng and Q. For our group project, we have done research on Delta Airlines. Delta Airlines is an air transportation for passengers and cargo. We specialize in flights for passengers not only domestically but all around the world. We travel to over 330 different destinations and over 150 countries worldwide, and are continuing to grow. Delta Airlines has been around for 86 years, serving passengers around the world as well as cargo flights. We do specialize in delivering cargo from countries and within the United States. What's unique about Delta is we are one of the first companies to have our own oil refinery. That helps out a lot because, as you know, it takes a lot of fuel to fly. Every flight consumes about 30,000 gallons of gasoline. So by us having our own crude oil refinery where we can dig in and get our own oil, we save about $1 per gallon sometimes, and that allows us to save about 30,000 just on a flight. So if you multiply that throughout the amount of flights that Delta does a year or a day, we are saving ourselves a lot of money. We're in the beginning of stages of the crude oil refinery, but as the year goes on, we will expand into that refinery and start getting more of a percentage from it. Last year in 2013, our revenue hit $37.63 billion, which net us an income of $10.54 billion. That just shows how large our company is. Some competitors, American Airlines, it recently merged with U.S. Airways, so it put two big airline companies together. So they are one of our big competitors. They travel over 330 different flights around the world. They compete with us for destinations, time of flights. They try to provide customers with the lowest fares and all that stuff. United Airlines is another one of our main competitors. They travel to 360 different countries around the globe. That's pretty big, and they are a combination of United Airways and Continental. That's how we know them, and they combined also for one United Airlines. And Lufthansa Airway is one of the biggest airlines in the world. It is actually the biggest in the world. It's based out of Germany, and they specialize in cargo flights as well. That's a big part of their business. Although they do focus largely on passengers. One of their biggest areas of business is the manufacturing and repairs of aircraft. Not only do they provide that service for their own company, but they do provide it for other companies. So they're making money off of other airlines by manufacturing and fixing their aircraft. Okay, the value chain analysis. The value chain analysis is used for a company to see where they need to improve and the logistics of everything. So it basically begins with the employee training. You have to, train your employees, your crew, make sure everyone is properly trained, and provide the information on the Delta mission so everyone is on the same page. You also want to make sure your systems are running properly. That's everything from kiosk services to online systems to make sure everything runs smoothly and make the transition for customers as easy as possible. Some of the operations are like the kiosk, onboard service, in-flight crew, the different packages we provide online on flight for the customers, such as Wi-Fi, any food or beverages, any TV, any television, anything like that. All of this put together, makes up the value chain analysis, and it's very thorough. And you have to analyze the entire entire operational system of the company, and the way the arrow leads is to the final product and the profit that you will make from it. So if we have everything in the value chain analysis working together easily, then it will lead to greater profits and better service. 21% of the market share of domestic flights belongs to Delta Airlines. That's a huge number. When you think of how many airlines there are in the United States and around the world, for one airline to comprise almost a quarter of the entire business is huge. That just means Delta's really expanding, providing exceptional service for their customers, and because of that, they own a 21% of the market. That's huge, and it's only going to continue to grow. Now, on the international scale, over the years, they've continued to expand into different countries, and now they're at 13.5% of international airline carriers. For a U.S.-based airline to be able to go internationally and comprise almost 14% of the market share, again, is huge. It just shows how big of a company Delta is. You have, like I said before, you have Lufthansa, which is a German-based airline, and we're basically taking 14% of their international market when we're running out of the U.S. So again, Delta continues to grow not only in the U.S., but internationally as well. Over the years, Delta has been working to improve their service and aircrafts. We're trying to make more fuel-efficient aircraft because, like I said earlier, 30,000 gallons of fuel are used on a flight. So if we can save any amount of fuel, it's going to lead to more profits for us, as well as in-service flights. We're trying to provide the customers with the biggest in-service care and experience that they can have. One of Delta's big things is the seating they have for international flights, which is very long. It's almost like you're in your own home. And there's like reclining chairs, you can order whatever you want, cable, watch whatever movies you want, and it's very comforting and just tries to make a long flight as smooth as possible. One of the new technological advances that Delta has made that no other company has so far, and they are trying to do, is Wi-Fi available during the flight. Most times when we're on a flight, we're told to turn off our phones. Delta has made it so you can keep your phone on and even access Wi-Fi, and that helps the passengers because they can stay communicated with whoever they need to, and it also helps the in-flight crew. It helps them to communicate better with the pilots and the crew at the airports or in the station. It helps everyone. So the Wi-Fi being available during the flight has taken Delta to the next level and again separated them from their competitors.
Economic analysis. In U.S. economy, the GDP will grow 2.57% or better in this year. As some analysts say, consumer confidence is bouncing back. The inflation will keep lower than 2% in 2015, and the oil price will be around 100 to 105, since there are some signs of stabilization in the Ukraine war. These all are good signs, good news for the airline industry. The U.S. airline industry shows healthy growth over the last couple years, with the expectation of the 2009. As Delta and other competitors had growth in 2013, the stable economic and higher consumption forced the airline industry will have good performance in 2014. Most of U.S. airline company stocks climbed to the good position in 2014, The industry is expected to continue to grow till the forthcoming years up to the 2016. Moreover, the stable oil price will give this industry some predictable profit. Dell generates approximately 65% of its revenue from the US market. Hence, the growing US airline industry would provide immense opportunity to company to boost up its market share year revenue.
Business strategy. Delta's strategy is low-cost flight and well-service. Because they are value chain, they have been able to successfully cut costs in certain areas in order to provide better service for their customer. Delta has one of the largest service network among the U.S. airline industry. A large service network enables to attract a corporate traveler to its loyalty program. Delta has made equity investment in the Virgin Australia in the 2013. They try to merge more large airline companies. They hold 49% of outstanding share. It's another large merge among shareholding after the merger with the Northwest in 2008. This investment increased the carrier's presence in important international air travel market, boosting its passenger traffic and revenue. Moreover, as many other airlines, Delta are figuring out a way to grow their fee source, such as baggage fees, access to the board Wi-Fi, food, drinks, and a better seat charge. According airlines are investing to enhance their product offering that including in-flight Wi-Fi and other entertainment options, improve lounge facility, and extra large room seat. That's why they try to keep low cost, and charge more fee from you, and they try to better their business.
Hi, Professor. I will introduce the past 3 financial analysis for Delta Airline companies. First, I want to talk about the short-term liquidity. From the chart, we can see that Delta's current ratio for 2013 is 0.682 and has been around that range for the last 2 years. They didn't have that change. It means that company's current assets always cover about 60% to 70% of current liabilities. And Delta Airlines may have problems meeting its short-term obligations if creditors will claim for payments within the next 12 months. Then, as we know, the higher the quick ratio, the faster the company pays off their obligations. Delta's quick ratio is above the airline industry average, although it has less proportions of current assets to the current liabilities. The type of assets are more liquid than most of its competitors' assets and can easily be converted into cash. According to the operating cash flow to current liability ratio for Delta Airlines, it decreased from 2011 to 2012 and increased from 2012 to 2013. However, all of these changes were lately. Although the current liability have increased mostly as a consequence of the company's growth, Delta's ability to generate cash from operations has accompanied this growth. And then within the working capital ratios, Delta collects its accounts receivable efficiently. It takes about 16 days for Delta Airlines to receive payments on, in terms of receivable from its customers and clients. In 2011, high inventory turnover measures that Delta has strong sales and renews its inventory very quickly, and Delta receives cash from sales in an average period of 6 days. However, from 2011 to 2012, it dropped quickly. It means that poor sales and therefore excess inventory. It was a bad sign. In the case of an accounts payable turnover of data, it decreased from 2011 to 2012 It is a sign that the company is taking longer to pay off its suppliers than it was before. Then let's talk about the capital structure and the long-term solvency for Delta Airline Company. Delta is characterized by a heavy debit weight in its financial structure. The liabilities to asset ratio indicates that more than 70%, even more than 100% in 2011 and 2012 of its assets are financed by liabilities. It means that Delta have somewhat high long-term solvency risk. When we evaluate the long term, we can conclude that about 46% of the long-term capital of Delta is debit in 2013. The high long-term debit to long-term capital ratio means that the finance of the company mainly comes from the debit, which can be quite risky. It is worth mentioning that in 2011 and 2012, the long-term debit to long-term capital ratio were greater than 1. It indicates that the Delta had more debit than capital, which is not a good thing for business as it can lead a lot of financial problems and indicates the financial weakness of the firm, and the debit would most likely increase the risk of the company. So Delta should make sure their long-term debit to capitalization ratio is controlled, so that their debit is under control. And actually in 2013 it has become better. In 2011 and 2012, the long-term debit to shareholders' equity ratio of Delta was negative and high. It is negative is perhaps due to the accounting method used to deal with accumulated losses from previous years, or leverage buyouts, fair value depreciation in currency positions, and substantial adjustment to intangible property. So the total shareholder equity was negative. It indicates that Delta Airlines can't cover its equity by assets in case if investor will claim for payments. So it usually means that the company has not been profitable. And in 2013, the long-term debit to shareholder equity ratio of Delta was 0.84, although it became positive, but it was also risky because they have more liabilities and less equity. Delta always had negative interest recovery ratio from 2011 to 2012 shows that the company is not able to pay its debit interest expenses. So this situation is risky for a company. The operating cash flow to total liability ratio measures the capacity to generate cash from the debit in which the company has engaged. Delta has increasing ratio that still is lower than the 0.2 from 2011 to 2013. It should have to be considered financially healthy in this area. Then for the asset utilization for Delta Airline companies, accounts receivable mainly include debit from credit card companies associated with ticket sales. Although the company estimates an allowance for doubtful accounts, we can infer that this account does not represent high risk for the inventory turnover I have introduced before, but I want to talk a little more about it. Inside the inventory account, Delta includes spare parts and supplies held at average cost, and aircraft fuel held in a FIFO basis. Although we might believe that FIFO can lead us to outdated cost of goods, the high inventory turnover mitigates part of this effect and can be seen as positive in an industry where its raw material prices are highly variable. Delta always maintains stable and high fixed asset turnover ratio from 2011 to 2013. The high fixed asset turnover ratio indicates that Delta generates net sales from fixed asset investments efficiently, but it also means that Delta may need future capital investments or upgrades. Finally, the current asset turnover was not high but stable from 2011 to 2012. It means not so efficient utilization of assets of data. Low asset turnover ratio means that the company is not managing its assets wisely. They may also indicate that the assets are obsolete. Operating performance. Data shows sales growth over the last 3 years from 2011 to 2013. However, this indicator has been falling. Company sales profits cover average about 50% of its COGS, and Delta spends 30% of its revenue on selling, general and administrative expenses. Almost 4.5% of revenue Delta is spending on non-cash expenses. Between 2011 and 2013, Delta's operating margin has positioned between 5.6% and 9%. According to CX Market, the operating margin of airline industry has been hit at 6.7% in the fourth quarter of 2013, trailing 12 months. At last, let's talk about the profitability for Delta Airline Company. In 2011 and 2012, the ROE of Delta were negative 342.3% and negative 274.6%. The negative ROE shows that Delta was making loss of $342.3 and $274 every $100 in it. However, in 2013, it became much better. It made earn of $221.6 every $100 in it. Other main profitability indicator is that the return on assets, which considers the profit returned on the assets invested. And in 2011 and 2012, the ROA shows that only 1.96% and 2.26% were generated from invested capital. And then in 2013, it increased to 20.17%. It shows that company's management has improved its return to invested capital. Moreover, Delta showed good improvement in EPS, earning per share, over the 3 years from 2011 to 2013. During the 3 years from 2011 to 2013, Delta has a stable asset turnover, but still below the industry average 0.9. When disaggregating ROA, we can determine that an asset turnover below 1 is decreasing the company's ROA. Since 2013, Delta was using financial leverage to improve the profitability for shareholders. In other words, the company is making money with other people's money.
Let's talk about Delta's P ratio. The price was closed at 36.07 on the April 25, 2014. The latest EPS was 12.28 in the end of the 2013. As a result, the P ratio is 3. It looks very low. However, the stock price climbed more than 30% whole year in the 2013. The earning price per share must follow the growth to make the P ratio as low as 3. Moreover, Delta's P ratio is ranked higher than 98% of the 104 companies in the global airline industry. Delta's P ratio looks very good for the investor, even they try to merge more companies, but they still have the good EPS and the P ratio. Let me explain the risk test, Z-score. After we calculate, the Delta's Z-score was 1.29 on the end of the 2013. It's lower than the 1.81, which means Delta has a possibility bankrupt in distress zone. However, Delta cannot judge as a regular corporation since 2005. Delta ever announced bankrupt protection in the 2005 and went to normal in the 2007. According to our figure on the below, the Z-score declined lower than a 0 in the 2005 and started to rebound in the 2007. The Z-score reflects the Delta's history. Moreover, the score declined again since they merged the Northwest Airline in the 2008 and rebound again next year. Although they still have a risk on the working capital and the earning problem, Delta keep going to better than before. They bought 49% of Virgin Airlines stocks to extend their service in the 2013, and they still get better earning growth the same year. This score grew 0.6 from the 2002 to 2013. Even they have the lower than the 1.81, but we believe they will get better from the earning, from the working capital. So maybe next year or next 2 years, they will have the better Z-score higher than the 1.81. Let me explain our conclusion about the Delta's financial report. We strongly recommend the investor to hold this company. I will explain by following reason. And Delta has been able to grow their revenue last year very much, and the company has been able to reduce the percentage of sales and devote to cost of the goods sold and the income tax expense. Delta has much improved their asset structure than before, and shows many signs of positive and profitable for future. However, their Z-score shows they have some risk to bankrupt. As a P/E ratio result, the Delta stock's price doubled in last 3 years, and the P/E ratio are declined due to their earning increasing. Although most airline firms is heavily leveraged, Delta tried to reduce their long-term debt and reduce their interest expense. At the same time, they still created better earnings than before. Thus, Delta bring more profit to their shareholder, along with their profitable business strategy, merge and cooperate with other airlines to extend their service. This industry is very risky and volatile, given it depends on the economic health and the fuel price. Delta Z-score also gives us indication that could be risky investment. We noticed the account payable increasing. We state that the stable economic brought earning to Delta in the 2013. The Delta tried to consolidate their business as well. However, the stock price has already climbed to the high position, which seems the price reflects this good condition already. So as a chain of the Delta's financial report improvement and the potential risk, we suggest the investor to hold Delta's stocks. And thank you for your listening.